Hello, I'm Carolyn Herbert for the Finance News Network, and joining me from Ethical Investment Manager Hunter Hall International to discuss its full-year results for 2015 is CEO David Deverall. David, welcome back.
Thanks, Caroline. It's great to be here.
You've just reported your full-year results for 2015. What were some of the highlights?
We're very pleased with our results for 2015. After-tax profits were up 15%. Our statutory earnings were up 88%. We had a big increase in our dividend. And so overall, we were very pleased with that outcome. It was struck on strong investment performance, a sharp improvement in our flows, and also lower costs.
And what is the total funds under management, and how did it increase over the year?
Our total funds under management as at the 30th of June 2015 was $1.118 billion, which was an increase of about 16 or 17% over the year.
David, the rise of self-managed super continues to gain momentum. How is Hunter Hall placed in this segment of the market?
The growth of the DIY investor is a really important trend in financial markets. And at Hunter Hall, we've been doing a couple of things over the year to become even more relevant for them. Firstly, we launched a new fund called the High Conviction Equities Trust, which is really aimed at that market. We launched it in December of last year. It delivered returns of nearly 60%. To the year ended 30th of June. Secondly, we did a capital raising for our listed investment company called Hunter Hall Global Value Limited. And over the course of the year, that company produced returns of around about 30%. And on the back of that, we were able to produce a special dividend of 4 cents per share, which was really good for DIY investors.
And how are these newer funds performing?
The funds are performing really well right across the board. So we have our main funds, the Value Growth Trust, and our listed vehicle called HHV, produced returns of 30% over the course of the year. Our new fund, the High Conviction Equities Trust, had returns for 7 months of approximately 60%. So we were very pleased with our performance of our funds over the year. And take into account also, we are an ethical fund manager. So I guess it says that the old saying that you can do well and do good at the same time.
And how have the ethical funds that you manage performed relative to their benchmarks?
Our ethical funds beat their benchmarks hands down right across our range. So we had everything from our Value Growth Trust, which beat its benchmark by at least 6%. Similarly with the HHV, the listed vehicle, that was up more than 6%. We had the Australian Value Trust beat its benchmark by more than 8%, and the list goes on. So we're very pleased with our performance. As an ethical manager, we can deliver great returns, but also do good for the environment.
And now taking a look at the general outlook for equities, how has the recent market volatility impacted on investor interest?
The recent equity market volatility is just a reminder how volatile equity markets are. We've been living through this period of time recently where we've had very little volatility. And so the recent change has been more of a return to normal. For most of our clients, they've been fairly relaxed about that. Obviously, they'll watch it if it continues. But from our point of view, we're just focused on doing what we do best, which is picking stocks that look cheap, no matter where they are in the world, because what we want to do is deliver great returns for our clients.
And finally, David, what will the focus be for Hunter Hall in FY16?
The focus for Hunter Hall in FY16 is really no different to any other year, which is we're really focused on delivering great investment returns for the investors in our funds. And we think that we've got a really good list of stocks in the funds, such as Certex, St Barbara, M2, Leo Palace, Take-Two Interactive, to name a few of many. And that's what we're really focused on for the year ahead, deliver great investment returns for our investors.
David Deverall, thank you for the update.
Thanks, Caroline.